Hello everyone and welcome back to another video. I know 2 weeks in a row. I'm on a roll right now. Normally I kind of split it up every 6 months and I get kind of nowhere with this kind of stuff. But anyways, like I said, I'll give you guys an update of what I was talking about last week. It'll be very brief because there's not a lot going on in the market right now. So I'll give you guys a quick rundown on my screen. But we'll also be talking about how I like to structure bond ETFs in my portfolio. Now, again, be mindful, do your own homework. This is not investment advice. This is just how I structure things, and I'm going to format it in a way that is very friendly and user-friendly because, you know, I don't want to get deep into talking about derivatives and all this stock market nonsense to people who are just trying to learn. Let's go ahead and talk about what's going on my screen real quick, and then let's get into bond ETFs. All right, everyone. Well, welcome to my screen. Again, not a lot going on here, like I was saying. So let's go ahead and just rush through the breakdown real quick. So I'm watching the S&P 500 index. Again, you can choose any index of your choosing. Just make sure it makes sense to you. What you're looking at actually makes sense. Do your own homework. This is just what's been working for me for however many years I've been doing this. So let's go ahead and do the breakdown. Kind of went down from where I was at before. So it pulled back a little bit, probably around 3%. Not a lot of movement. Again, I think investors are kind of looking for whatever's coming next with the president and the tariff situation. So if Trump says, "Oh, tariffs for everyone, we're going to disregard the 90-day or whatever happened the other day," this is coming down like, you know, really, it's going to be coming down like, I don't know, it's going to come down, okay? If he ends up saying, "You know what? No more tariffs, I changed my mind, free trade and whatnot," this is going to go all the way up, all right? Again, we don't know what's going to happen. Maybe none of those are going to happen. Maybe the market's just going to go sideways for a little bit. That's fine, right? Either way, now is a good time to either stay cash or pick a side. So let's go ahead and take a look at what I'm doing. I pick both sides. Why? I don't know. I just wanted to pick both sides. SPXL. This follows the overall market. We talked about that last week. So if the S&P goes down, this one goes down. It's a triple leverage ETF that follows the overall stock market. So right now I have one share, which is about $110. I sold my other ones. I made some money, but not a lot. So I bought one share because I don't know which way this is going to go. I also bought the inverse. So if this goes down, this one, SPXS, will go up. I bought about $100 of this stock as well. So it's about 10 shares. I mean, it's like $700 and some dollars. Not overwhelmingly crazy. Yeah. Whichever way the market goes, I'm going to sell one and buy the other. So that's what I'm going to do. Again, nothing's changed with my bonds or with VU. So let's go ahead and take a look at the VIX index. So it broke below the 30 mark range where I would start buying more stuff, right? That's what I said last week. If it breaks below 30, I think I'm going to start leaning in. Why haven't I leaned in more? Well, let's talk about it. The reason why I didn't buy more is because even though the VIX is choosing to go down, which means it's indicating a bullish run on the S&P, I don't see that. Let's look at it again. /ES. Does this look bullish to you? No. It pulled back since the last time I talked to all of you. It's not going anywhere, right? So just because one thing says something doesn't mean the other validates it. So if they both say the same thing, the VIX is coming down, the stocks are going up, that's my indication. Hey, I'm gonna start leaning in a little bit. But that's not the case here. It's coming down on the VIX. It's also coming down on the S&P 500. Down on the VIX means bullish. Down on the S&P means it's gone down. So I don't know where this is going to go. We're just going to have to wait and see what happens this following week. Alright guys, so for the main meat of this video, we're going to be talking about bond ETFs. Really not that difficult to understand. So essentially, bond ETFs is just a small pool. You think about it as a basket in a way. Easter is like tomorrow. So you can think about it as a basket of eggs in your little Easter basket, right? So the eggs are the bonds that are traded publicly to people like you and me. So let's talk about the benefits, right? The benefits to a bond ETF is, one, they're relatively liquid. You can buy them and sell them at any time. You don't have to worry about a maturity date and your funds being locked away for a certain period of time. No. You can buy and sell whenever you want. Two, it's relatively safe depending on which bond you get. If you buy a corporate bond, or if you buy a treasury bond, or a treasury note, maybe a treasury bill. It depends on what you buy. Corporate bonds are a little bit riskier depending on which company you buy. Again, do your homework. Or they could be relatively safe. But how safe? Do you want a super safe treasury bond, or do you want a riskier one? Although treasury bonds aren't super risky. But again, which time frame are you looking at? Are you looking at a 10-year? 4 months? 2 years? 1 month? Right? What are you looking for? Again, do your homework. There's a lot of information about bonds out there. This is what we call, in the investment realm, fixed incomes. Okay? You don't have to remember that, but you might want to take notes. So let's briefly talk about why they're important. Well, if I'm holding a lot of risky stocks, I kind of want to protect my assets in a way from that risky stock. So I go to something that's safe. Bonds, right? It's simple. You carry risky, you carry safe, right? You want a good balance. Now, what is the ratio? Do I carry more risky stocks, or do I carry more safe bonds? That's up to you. It depends on what you want to risk, right? Personally, I carry about, right now I carry about 40% in treasuries, and then the remainder stocks. Market's pretty volatile right now. I'm trying to keep my assets safe because bonds don't really move that much, and I get a pretty good yield out of it. So I'm benefiting from that bond yield, and that stuff doesn't really move that much. Let's go ahead and go onto my computer again and take a look at which ones that I personally like to hold. All right, so let's go ahead and talk about bonds, fixed incomes, right? Let's go ahead and talk about it. So VGSH, one of my favorite ones to talk about. Again, I didn't buy enough. I didn't buy more. I should have bought more, but I'll probably buy more this week. All right, I'm gonna buy more. No worries. Okay, so why do I like VGSH? One, it's pretty cheap. Look at how much it is for one bond. It's $58.70 and some change, right? So one, it's cheap. Two, it's pretty liquid. Three, expense ratio wise, it's pretty cheap. And we'll talk about what that means. AGG is kind of the standard. I mean, a lot of advisors use this. It's pretty good. It's a very diverse pool. Again, think about your eggs. This one has a lot of eggs in that basket when we talk about that Easter basket, right? Corporate eggs. This one has government eggs. You know, it has all sorts of different stuff in it. This one's managed, of course. All of the ones that I'm talking about are managed. There are some portfolio manager. Let's talk about expense ratio. There's a few things you want to watch out for when it comes to fixed incomes, and let's talk about it. Let's go ahead and look up VGSH. I love VGSH, right?
VGSH, you go to Vanguard's website, you click the first link, right? And it gives you all of the information regarding this short-term treasury ETF, right? So again, market price $58 and some change. The expense ratio is 3. So it's managed by a portfolio manager, right? They gather a bunch of short-term treasuries from the government and they manage it. And you have to pay a fee, right? This fee is 0.03%. This is probably the cheapest you'll ever have to pay for a managed portfolio, right? It's the cheapest one out there. So it has a 4.43% yield, which that's the interest that you're making. It's really good. 4.4% is like, it's wonderful. What's your savings account paying right now? Again, this is something to think about. The treasuries, I love this one. I talk about this one all the time. Okay, number of bonds, only 69. Okay, very small amount of holdings on this one. Let's go ahead and look at this is it. U.S. Treasury notes and bonds, right? This is all of the holdings right here. And the amounts. It tells you everything. So yeah, all of the information that you'll need will be right here off Vanguard's website. All right, let's go ahead and look at the other one. AGG, okay? Anyways, you go to their website, iShares Core US Aggregate Bond Index ETF, right? So again, this one's really cheap too. Let's go ahead and take a look at the fact sheet, right? Yield, here it is. It has 4.72%. That's higher than the treasury yield. But again, this one has more of a basket. More eggs are in this one, right? The management fee, you'll see it right here, 0.03. Wonderful, right? Great expense fee, right? Super cheap. Now let's talk about the current holdings. The other ones were just treasury notes. This one's going to have a higher yield. It's going to give you more interest because it's holding other things that probably give higher interest, like Bank of America, JP Morgan Chase, Morgan Stanley, Wells Fargo. All sorts of different things are in this holding. This is not all of them. You can click on all right here to find more, but that's just kind of like their top percent. All right, so again, these are things that you should probably watch over. Do your homework. These things are very good to look at. You want to make sure that you protect your assets, the things that you're risking. You want to protect your money. Again, you worked very hard for your money, but I want to make sure that I'm doing everything in my power to protect my money and to set me up for success in the long run, okay? I have a whole Excel spreadsheet about all of my holdings and everything that I'm watching. You know, will I disclose all of that? Probably not. You know, every trader has their secrets. You know, but these things are something that you want to watch out for when you do your own analysis, your own holdings, your own gathering. So again, make sure you do your homework.
All right, everyone, that's all for the video. Thank you so much for your time. I appreciate it. If you guys like the video, this is a different camera because my battery on my other camera just didn't work. So kudos to the backup camera, I guess. So thanks again for watching this video. If you liked it, that's great. I liked it too. If you have any questions about this, please reach out to me on Instagram. I'm more active on there than any other platform, but you can also reach me on X and Facebook, so that's great. Or just ask me questions in the comment section below. Anyways, I hope you guys enjoyed this video. I want to wish you guys as well a very blessed Easter. Happy Resurrection Sunday. You know, our Lord and Savior Jesus Christ rose again on this Sunday. I want to make sure that that's important. You know, finances are great, but you know, Christ is eternity. So again, He's risen. So God bless all of you. Thank you so much for your time. Christ is Lord. Remember that, and I hope you have a good Easter or Resurrection Sunday.